Welcome, DeFi Degens, to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and gonna try a little bit of a different format today. I'm gonna try to keep these under 30 minutes, just so I don't get too long-winded and I can just get the information out. So let's go ahead and jump on into it. So got DeFi Llama up. Always like to start with that. We're trending sideways. When it comes to both TVL and volume, across all dexes, we're just nice and steady the way that we like it in DeFi. We like it when things are trending sideways. When they're trending sideways, especially with ranged pools, you earn steady yield. So uh, TVL is growing, a little bit, day by day. Even though that the markets are, kind of boring, we're still making money in DeFi. You can see down here, Pancake Swap, when it comes to 24-hour volume, is over about twice, almost twice what Uniswap is. Aerodrome is sitting at number 4. It was at number 3. Radium bumped up a little bit, in the past day. So, we're just, sticking with the larger platforms. I don't like to venture outside. I'm very 102%. And if you scroll down, you'll see that total value, Plume is now in the top 10. So you got Mantra with 1.9 million. Oh, sorry. Hold on one sec. I take that back. Plume is not in the top 10. However, let's actually go down here to networks. Give us a little bit of a deeper look. So you can see, Ethereum, of course, has a huge market share. Let's go by total value. So it looks like Plume is at number 12. So, but if you look at growth, you can see Plume, as far as RWA holders, is far surpasses Ethereum. So, yeah, it's just these are analytics that I like to keep an eye on, just to understand how the market's growing, what projects have growth, because obviously, if if a project is growing in TVL, in this case, RWA asset count or holders, any healthy ecosystem is on an upswing. You don't want to be, getting into a project if it's flat or, if it's shrinking. So, me, I'm always looking at analytics. I'm kind of a dork when it comes to, looking at these, different dashboards and, different charts and things like that, because it's going to give you a better idea of, where to put your liquidity, where it's going to be the most profitable. So, hey, what's up, Ellie? What's up, Jay? Appreciate you guys. Appreciate you guys showing up. Looks like we got a good amount of people across all of our different platforms. By all means, if you want to join the chat, if you have any questions, join us over on YouTube and ask your questions. I'm more than happy to answer them. Our socials, if you could, make sure you're following us on YouTube. We just surpassed 48.2 thousand subscribers. We're always growing, and appreciate all of you spreading the good word. I know Ellie is great at it, Jay's great at it, supporting the channel. Appreciate you both. And X. So on X, I want to share some of the things that I saw this morning. So, top public chains by TVL growth. Plume Network, 93.6% that it's grown since its launch. And that's just in the past 3 weeks. So you got Algorand, WorldCoin, Tezos, Sonium. Never heard of this Kaya chain. Injective, Say, Stacks, and Stellar, I guess, are the top chains, growth in the past 7 days. TVL growth. Plume, I do not understand the price action on Plume with everything that it has, going on with it. I don't understand, why the price action, and that's why I don't follow price. Price is not an accurate reflection of a project. So, and especially since I'm earning, in DeFi with my Plume, which I'll get into. I don't put a whole lot of weight in price. Price will come. I like to stack good fundamentals, and the price appreciation will come, whenever the market's ready. So that's just me. Do with that as you will. Our Discord, definitely, join the Discover Investment Group Discord. There is some great alpha being dropped in here. You have, Blockchain Basement is in here. Discover Crypto's in here. Discover Crypto is Josh, DZ, and sometimes TJ. They give great news, great insights into the macro markets. Same with Blockchain Basement. Great macro news and trading. A little bit of trading, and then of course you have Kelly over at BitLab Academy, who's always giving the alpha on technical analysis. Giving you the charts. What's looking like it's about to pump. Every morning they're in here doing live streams, sharing the alpha as far as trades that they're personally getting into. So if you're looking for somebody that's going to hold your hand a little bit, if you're just getting into trades, it's a great place. And that kind of brings us to our topic for this show. Is I'm going to be talking about basically trading, hodling, and DeFi, and the pros and cons of each, and what might be right for you. I'm not going to, obviously not going to decide for you, but based off of what I talk about today, hopefully it'll give you a better idea of what fits your trading style, your time, your risk, how risk adverse you are. All these different things are all things you have to take into account when you decide how you're going to enter the markets and how you plan on making money. So, all right. Let's go ahead and jump on into it. So I'll just throw this up while I'm talking about this. So, HODL versus trade versus DeFi. I'm going to, kind of follow my notes over here just to make sure I stay on track and stay in time. So in today's crypto market breakdown, I'm going to do a deep dive on the 3 most popular crypto investing strategies: hodling, trading, and DeFi, and laying out the real pros and cons of each approach in 2025. And to preface this, there is no one that's better than the other, just universally. You have to find what works for you. Some people that don't have the time to invest in, studying charts or, getting into DeFi and learning how liquidity pools, work, maybe hodling is going to be right for you. If you're, have the time and you're wanting to earn, and, and you take the time to learn technical analysis to where you can be profitable, then, for quick gains, maybe maybe trading is good for you. If you're somebody like me that just likes to do deep dive analysis into projects, and you're good with, good steady growth, where it's not super volatile, you're relying on yield, then DeFi might be good for you. So with that, with Bitcoin volatility that's been going on, and altcoins just kind of doing their sideways action, DeFi protocols offering really good yields. I mean, I know me and a lot of the people in our community, the DeFi crypto and airdrops community on Discord, all of us are making really good yield. When the markets were dumping, we were making yield. When they were going sideways, we were making yield. And when they pump, we make yield, and we make price, get price appreciation. Of course, I'm a little biased, so I'm going to lean a little towards DeFi. So you'll forgive me. All right. So the benefits and risks of long-term hodling top crypto assets like Bitcoin, Ethereum, Solana, XRP, blue chips in a changing macro landscape. The advantages of short-term trading from scalping altcoin breakouts to riding news-driven pumps, but also the hidden dangers of psychological traps. Anybody that's been watching Josh, he talks about the windshield wiper and the heat map where the longs and shorts are stacked, and it's there are psychological levels, and there are levels where the market makers or those that manipulate the markets like to push the market and manipulate the market to liquidate those people to make their profits. So and the DeFi strategy in 2025, how protocols like Pendle, Uniswap, Curve, Aave, and Aerodrome are generating yield and revolutionizing crypto passive income with new risks in yield farming, which is impermanent loss and potential smart contract exposure. Where people will use malicious smart contracts to potentially take your liquidity. So again, I'm going to give you the pros and cons of each. Just because I like DeFi doesn't mean that I'm going to, not talk about the cons of DeFi. All right, so let's go ahead and jump on in. Crypto is no longer a one size fits all. Each strategy has its place, but timing, execution, and discipline make all the difference. No matter which of these we talk about, emotion, you need to remove emotion. If you're hodling, definitely need to remove emotion because you will drive yourself crazy watching these markets and them dumping or trending sideways, and you're hodling and you're listening or watching people that are making money on a meme coin, and you try to get into that. Anyway, just keep emotion out of your trading. Your hodling, your trading, and your DeFi. By the end, you'll know exactly which strategy or mix of strategies. You don't have to pick one. I'm doing hodling and I'm doing DeFi. Is most effective for you. Segment breakdown. All right. So let's talk about hodling, long-term hodling. Pros. It's simple and it's low maintenance. Like I talked about, it's if you do your research, you can buy a crypto asset, you can hold it, on an exchange. I obviously don't suggest that. I suggest you use something like an Arculus. Put it in cold storage, and it allows you to, hold it securely where it's not on an exchange where, it could get hacked, it can get, go down, and they take your assets with you. I mean, it happened with FTX. Historically, strong performance, blue chips. If you can have the discipline and you can hodl, Bitcoin has done really well. At one point during the bear market, it went down to like 16, 17K. It's now around 100,000, a little above 100,000. People have made really good money simply by buying through the bear market Bitcoin and holding that asset. A lot of the ISO coins like XRP, XLM, um, uh, Algo, H bar, a lot of those. They had about a 5 or 6x, early on in the bull market, and since then they've cooled off. But again, they had a pump. Forgive my camera. I'm sitting by a bunch of windows, so the sun and the clouds will make it fluctuate. Tax benefits. So if you are buying crypto and you're holding it longer than 24 months, then, or excuse me, 12 months, then you go into long-term capital gains, which is a lot less than short-term capital gains, which is below 12 months. So if you're constantly day trading or you're earning yield in DeFi, you're going to have a higher exposure to tax liabilities. And again, I'm not an expert on this. Consult your tax professional for details on this. But it's a pro of hodling assets. And it's emotionally, it's easier if you're not checking the price, price of your assets daily. If you're just buying, going about your daily life, treating it like, a long-term investment, it's a lot easier to do. Hold on. Let me see if I can adjust this a little bit. There we go. All right. And in a strong macro bull cycle and ETF driven runs, then you're going to get really good price appreciation. Markets, if at this point, I'm starting to I kind of wonder sometimes, if these markets take off, are we going to see an alt season? I personally think we will, but again, if you're looking at a lower risk play, maybe just DCing on Bitcoin and just you know setting it on some of these platforms like Coinbase. You can set and uphold. You can set automatic buys, like weekly automatic buys, where you just buy no matter what the price of Bitcoin is doing. And it's a really good way to build up your Bitcoin holdings. I mean, if you're looking for something really simple and hands off. So the cons of hodling. So you're not earning yield unless you pair it with staking. Staking is a form of DeFi. Again, you can do a mix of these. So you can buy, not necessarily Bitcoin and stake it, but Ethereum, for a low yield, but you can earn. So you can do Ethereum, you can do Sol. There's a lot of different projects out there that you can buy and you can stake natively or on some platforms. You can earn, staking your crypto. So that's a good thing to check out. What do we got here? Opportunity costs during altcoin or DeFi surges. So a lot of times when these pumps happen in DeFi, you can be earning yield in this, in the times where things are going sideways. You can be building your bags with trading, but with DeFi, you just hold what you got. But with trading, you can earn to where you can stack your bags more for when, the alt season comes, or when there's surges in Bitcoin. People like Josh and Drew, they love to trade Bitcoin because there's a lot of data that they can go off of to decide, when they're going to get in and out and things like that, like those heat maps. So, yeah, I mean, hodling, you're just purely off the liquidity that you're putting in is what you're going to get. But with DeFi and trading, you can stack your bags. So that's a con that you can't do with with hodling. You're vulnerable to long bear markets. So if you hold too long, like a lot of people do, they get caught up in the pumps and the excitement, and they think they can hold on just a little bit longer and make just a little bit more money, and they end up round tripping their bags. You're going to hear this term, round tripping your bags. And if you potentially can do that, if you're not DCAing out, if you don't have a ladder out strategy. So again, have a plan on how you're going to take profits. Requires strong conviction and patience. This last bear market, it was 3 years, 3 years plus. So if you end up round tripping your bags, or you get in at the end of a bull run, like I did, I got in at the very end of the last bull run, all through the bear market. I was learning about DeFi or not DeFi. I was learning about crypto, and I was stacking my bags. And as my education grew, my desire to branch out into trying my hand at trading and trying my hand at DeFi, and even moving my liquidity, from some assets to other assets. Like I, sold my XRP. If I have time, I'll get into that. But again, it's there's a lot of time to where you're just sitting there and you're just holding your bags, hoping that someday they're going to go up. Hold on. Let's see what we did here. Give me 1 second. There we go. Damn, my camera. Man, why does it keep doing that? All right. So, let's see. So this is best for people that are long-term believers, that are just passive investors. Hodling is if you don't have the time, If you believe in crypto and you believe in, certain projects like, Bitcoin or Ethereum or whatever, HODLing is probably best for you. Where you can just buy, hold, forget. That's, kind of HODLing in a nutshell. Next, let's talk about trading. So trading is short term. So you're buying crypto assets, you're, going into the charts, maybe I'll see about bringing something up here. You know what? I'll just bring up Trading View. It'll be easier. And most of you out there know what trading is, but basically what trading is, especially day trading and scalp trading. And again, I am not an expert at this. I will preface this with that. And I tried trading. I tried to learn it. I learned enough that, lines of support and resistance and, a couple of, different formations and stuff. I sucked at it. And I'm sure if I kept at it, I could end up being good at it at some point. But I don't like how quick it moves. But anyway, I don't want to get on a rabbit trail. So basically what trading is you are like, say that you short an asset, in this case, Bitcoin. And I know I got Bitcoin dominance up, but it's just a chart. So basically what short-term traders are doing is, like, say that this hadn't happened yet, that it's sitting right here. What traders do is they're able to look at the charts, they're able to look at data and make an educated guess on if the price is going to go down or if it's going to go up. And say that you decided that it was going to go down, like this chart did. You can put what's called a short in, and you can basically put in a bet that it's going to go down. And by putting that in, and if it does go down, then you start getting profit. Because basically you're making money off of, the markets that, people that thought it was going to go up, that are doing longs. So anyway, like I said, I'm not an expert on this, but that's what you're basically doing, is you're betting if it's going to go down or up, and you're making money based off that educated guess. And again, you can, kind of mitigate your risks off of how educated and how knowledgeable you are about reading the charts. Hey, what up, Chili? All right. So actually, let's throw up some of the chat, so everybody out there listening knows, if they come over to the YouTube, that you can actually, there's people here to talk to. And like I said, I definitely encourage you to come over and ask questions. I love questions. I was a military instructor for many, many years. If I'm not getting questions, it means that people aren't engaged and they're not learning. So I want to make sure that I'm here teaching you some good skills. So please come on over and ask your questions. All right, let's get into the pros. So you can be profitable in trading no matter what direction the markets are going. Again, if it's pumping, and you're longing, you can make money. And if it's dumping and you're shorting, you can make a lot of money. You can make a lot of money fast if you know how to trade. It is by far the fastest way to make money. But one of the cons is it's a fast way to lose money as well. And there is a lot of people out there that I found are a lot smarter than me on how to do this. They know how to use the tools. They know how to read the markets better than I do. So me personally, I stayed away from from trading. Again, I'm still trying to learn, but I'm going to give it some time, and I'm going to use the free money that I make in DeFi to toy with learning how to trade instead of using my actual liquidity. So anyway, I don't know what this means, but capital efficiency with rotation and leverage. So you can take out leverage I don't know what capital efficiency is. You can use leverage. So like, say that you long you can just simply long, which is like a 1x, or you can take out leverage. So if you have $100, worth of Bitcoin and you want to long, you can take out leverage and say that you do a 10x. It will, with that $100, with a 10x, it will act as if you are trading with $1,000, which is 10x of $100. And so the move or the profitability will be 10x. However, there is liquidation levels. And so if it ends up, the price ends up dropping instead of going up, and it wicks down to that liquidation level, that price where you can get liquidated, it will liquidate you and take your $100. So, trading leverage, it adds a new element to your trading. And again, I won't go into depth on any of this. Drew, over Blockchain Basement does a great job. Kelly is by far the best. If you want to learn about trading, Jason Casper, another great channel, not part of our, family of channels, forgot to cover it right here. This is our family of channels, here at Hit Network. You got Discover Crypto, Blockchain Basement, BitLab Academy, and us. But yeah, Jason Casper isn't part of us. Frankie Candles, another great guy. I don't know him personally, but great at chart analysis and teaching people charts. So let's see. Get back to this. All right. And high upside. So in altcoin microcycles. So, obviously when altcoins are pumping, if you can, put a little bit of money into some of these, whenever that, and catch them on upswings. And then also when we start going into a bear market and you start shorting, there is really easy money to be made in, catching these pumps and these dumps. But again, me personally, I have fallen in love with DeFi. So, all right, cons. Let's go over the cons of trading. Let's see. Maybe I'm going to be able to stay under 30 minutes. Cons: emotionally and mentally demanding. You can go on YouTube and TikTok and things like that, and you can see people melting down over pumps and dumps. So going against their trades. So it is. You have to keep your emotions in check. High risk of loss, and unless you have strict risk management. Stop losses. I'm not going to get into it, but a stop loss is basically a safety net. So, if you're, trying to keep from getting liquidated, it basically is a spot to where it will automatically close out your position to keep you from losing all of your liquidity that you're trading with. Again, I won't get into it. You can learn it from much smarter people than me. Nice. Good to hear it, Jay. Gotten some full range positions to get a nice foundation. Love to see it. Ellie, anyone get in any pools? Yeah. Jay and Ellie both in our community. Oh, Deadwood. What up, brother? Sorry I missed you. So, let's see. Cons. Time sensitive, requires technical and fundamental analysis. So again, there is a lot of levers, that you have to take into account when you're doing trading. Slippage, front running, and fee drag. I don't know what that is. Not going to talk on it. I will not talk on things that I'm not knowledgeable about. Best for experienced traders or committed learners with a high risk tolerant mindset. So if you have money that you can afford to lose, there are some platforms that will let you paper trade, which is basically fake money, so that you can practice, and without losing your own money. I highly suggest you use those to learn how to trade. And again, watch BitLab Academy, learn how technical analysis. Watch Frankie Candles, watch Jason Casper. Watch people like Drew that trade. Get in our Discord, and jump in there, and in the mornings, and enter and exit trades live with Drew and with Kelly. Highly suggest doing that. It's kind of like training wheels. So, there is a free section in the Discover Investment group. And then, of course, there's, a paywall where you can get, some higher level alpha, as you progress in your trading career and in your, DeFi. All right. So my favorite, DeFi. Let's do this. All right. So all my DeFi degens in the chat, they know how excited I get. All right. So the pros: passive income via lending, farming, and staking. The great thing about DeFi is if you build a proper portfolio, and I'll show you this right here. If you haven't already and you're interested in DeFi, I have been building out a DeFi Academy. You can start on episode 1. It explains the basics of DeFi. And at the end of it, it just goes right into episode 2, 3, 4, 5, and all the way to I've gotten to episode 8, which is building your DeFi portfolio. That's what Jay was talking about when he was, talking about building out his nice foundation. Is if you build out your DeFi portfolio properly with staking, lending, and full range pools, you can have a very risk off portfolio that earns you steady yield. You don't have to micromanage it. You don't have to be watching it all day. You can build it out. You can go to work. You can spend time with the family. You can travel. You can do whatever you need to do, go to the gym. And it's just 24/7, 365, earning you passive yield. That is what I fell in love with DeFi about, is, living off grid. I don't want to have to be micromanaging stuff all the time. Capital efficiency using platforms like Pendle and Curve. I'm not, a 100% expert on DeFi. I'm still learning. I don't understand what capital efficiency is, so I'm not going to speak on it. On-chain transparency and compostability. On-chain transparency. You can look on-chain and, you can see about, a lot of these projects. Full range are great since Kita wants to fluctuate. Yes. I cannot stress enough the importance of the majority of your portfolio being in full range pools. And I'll show you mine here in a second. I went over 30 minutes. I'm sorry. I'm long-winded. Kill me, begin. All right. Let's see. Yield opportunities on L2s like Base Arbitrum, and solid platforms like Uniswap, Aave, Aerodrome, and those projects or those DeFi protocols that have deep liquidity. I highly suggest that you stick to those, especially when you just start. You can degen into some smaller platforms that have higher APR if you want later on to test it out. But to start, I highly suggest that you stick to the more popular platforms like PancakeSwap, things like that. All right. So let's get into the cons. So some of the cons are there is smart contract risk. As you learn about DeFi, what makes DeFi possible is something called a smart contract. I get into that in episode 1, of the DeFi Academy. I talk about smart contracts, what they are, how they work, but basically it's what makes DeFi possible. But if you're going to lesser known platforms, that they could have, exploits, and somebody can post, smart contracts on there, pools, and potentially take your liquidity, take your money. So you need to understand, and that's why I suggest you go through the DeFi Academy, is learn about this stuff before you start deploying your liquidity so that you can do it in a way where you mitigate your risk. Impermanent loss, another thing that I get into in the DeFi Academy. I won't get into it here because I can go on and on and on about it. APYs, often unsustainable without emissions. So again, smaller platforms might promise high APYs that are not sustainable to, try to attract liquidity. I prefer to earn steady yields. Again, like Jay talked about, like Ellie talked about, these full range positions are a much better way to earn good, steady yield instead of just earning, a bunch of yield for a day or two, and then you're out of range, or the APR drops, and now, you're not earning as much, or you're not earning anything because you're out of range. So again, it's all about how you build your portfolio. High learning curve. Yes and no. It can, if you try to if you try to enter DeFi balls deep. If you just huck off a cliff into DeFi, yes, it can be very overwhelming. However, and I know I'm pitching my own DeFi course. I cannot stress it enough, though, that there's not a lot of people out there teaching DeFi, and I'm one of the few that I've found. And the reason I started doing this, not a lot of people focus on entry level DeFi. Most are talking about it at such a high level, with millions of dollars, that a lot of people that are trying to get into DeFi, they're using high level terms and large amounts of money, and it gets lost on people like me and you. So I started chronicling my journey when I first got into DeFi. I'm sharing my mistakes. I'm not just going to show you my successes to try to get views and try to get, people to follow me. I'm going to show you the mistakes I make, and I'm going to show you that my successes. We're on this journey together. So again, go through the course. It's going to help you with this. And it's going to allow you to baby step. In the military, we call it crawl, walk, run. It's going to show you how to crawl into DeFi using things like staking, which you still have full price appreciation while you're hodling your assets, but you're still earning yield. Using lending on platforms like Aave, you might not earn a lot on your Bitcoin, but you might earn 5% on your Bitcoin while you're hodling Bitcoin. Why not earn free yield on your Bitcoin? On other assets, you can as well. On stables, you can sometimes earn 20% APR on stable coins. It's what I plan on doing as I ladder out, during this bull market. If we ever get the alt season, out of my DeFi, I'm going to start taking all of my yield, all my profits into stables, which I'm going to put into DeFi, earning 10, 15, 20%. Wait, lock in that value, wait for the markets to crash. And then I'm going to start DCAing towards the bottom into Bitcoin, which all DeFi, and into, strong alts, which all also DeFi, and rinse and repeat. But I'll be locking in that liquidity. Let's see. Impermanent loss, high learning curve, regulatory uncertainty. That is changing. So DeFi has been a kind of a dark horse, because yes, you can earn a lot of money, but a lot of people were wondering what is going to happen, especially with the last administration. I'm not going to get political about it, but the last administration, the SEC and Elizabeth Warren were just going after crypto in general, and definitely DeFi, because it was a threat to, the control that they had, banking. It was a threat to the banks. Banks were the ones that wanted us to give them our liquidity, and they would lend out our money and make, 7, 8, 9, 10% APR by lending out our money. And they were happy with that. And of course they were. But then DeFi came out, and it allows people like me and you to put our liquidity, out there on these platforms, and through smart contracts, allow people to borrow our liquidity, or, use our liquidity for a small fee. It's not predatory at all. They understand the fees. It's very small, and it allows them to trade. It allows them to swap between assets. It allows DeFi to operate. It allows them to borrow. So, yeah, and and with that, the Trump administration is now drafting legislation, and that they are signing into law, that is setting up clear guidelines that, these platforms to operate and offer their services to US citizens like you and me, and those of you out there that, are, listening in the UK and other countries. Your regulatory authorities will most likely follow suit with the US. I mean, like it or not, we are one of the largest, if not the largest market. And so oftentimes they just like to mirror what we do. So that was a question mark for a long time. But this administration is embracing with open arms DeFi and RWAs. You can look in the news. You can listen to any speech that's given at the Bitcoin conference. I think they were talking about DeFi more than they were talking about Bitcoin. So DeFi and TradFi, traditional finance, decentralized finance, traditional finance. DeFi is crypto based. Traditional finance is basically what we've had for decades, and longer. They are merging. DeFi is gonna in TradFi are gonna merge, and it's just gonna become finance. It's going to happen. It's already happening. You have banks and institutions that are all building out DeFi applications. It's here, it's happening. Learn about it, get on board, and learn how you can earn. And it's best for on-chain natives, and passive income seekers. Like I said, with DeFi, it's, if you build out your portfolio, I mean, if you want to micromanage it and do, range positions and stuff like that, again, I have, episodes that you can look at that talk about range positions and, how you can boost your earning using them. But anybody from just people that want to deposit liquidity and forget about it and let it grow, we teach how to do that. And if you want to micromanage it and, a small portion of your portfolio, or maybe you're a degen and you want to, go all in on range positions, on, meme coin pools, if that's your flavor, there's a lot of money to be made very quickly, doing that. But just like you can make money quick, you can lose money quick. So keep that in mind. So with that, let's see if there's any questions. Yes. Yeah, I agree with Ellie. DeFi is best. Yeah, Jay, I appreciate it, man. There's the videos, the DeFi, DeFi Academy, those things are valuable. And again, I am not, I will not pretend like I am the most knowledgeable person out there in DeFi, but I am one of the only, if not the only one, that is teaching entry level. So, and it's all free. We have absolutely zero, paywalls. You don't have to pay for anything on our channel. It's, we don't want paid subscriptions, memberships. We don't want super chats. We don't want any of that. I just want you to learn and earn. I want you to be successful. We don't even have ads or, any, paid advertisers or, promotions, anything like that. Me and Jeff, we do this for love of the game, and we just want you all to earn it and be successful. Yes, it is. It's Arrow payday today. Arrow locks every week, like clockwork. Those of us in DeFi, that have locks in Aerodrome, if you want to know what that is, again, episode 5, Aerodrome Finance. It's a deep dive into how that works and, how you can use liquidity pools and Aerodrome locks to earn passive income. And there's just no end to the earning here. How am I going to close this out? You know what? I'm going to go over my portfolio real quick and show you that I kind of put my money where my mouth is. All right, so let's do this. So this is some of my positions, and again, I'm very transparent here. I'm gonna, every time I'll show you exactly what's going on with my portfolio. I'm not ashamed. Actually, you know what? Let's start here. So I started with 15 grand. You can see back here in October, I started with 15,000. November, I wasn't tracking. For October, November, I actually wasn't tracking. I just know what I started with. December is when I really started getting serious about my DeFi, when I saw the potential and started tracking. And those of you that don't remember, that's when the markets were pumping in November, December. And so I really dug into DeFi. So I went from 15 grand to almost 30 grand during that pump. And then you can see, January we started to dump, February, March, April, we leveled out. May, I did great. And June, I'm obviously doing really good. I'm up almost to 40 grand. And we are still, you know, pretty down. I mean, if you look at my bull run portfolio, I'm down to 50 grand. Whereas when things were pumping back in December, I was up over 100 grand. So, we're still very down when it comes to, especially alts and things like that. But you can see the whole time that we've been dumping and going sideways, I've been stacking with DeFi. And so I have like my DeFi portfolio. If we keep going like this, it's going to end up passing, my 15 grand that I started with is going to end up passing my 50, 60 grand that I had in my DeFi or my bull run portfolio. So you can see how I'm stacking free crypto. And when the markets start to pump, I'm going to be getting price appreciation, on both my, crypto that I'm holding and the yield that I've earned. So it just, like I said, it really gives you an idea of how you can grow your portfolio with passive income using, and you can do it with trading too, but with DeFi. All right. So this is all my positions, and all these positions, all these positions started with this one position. So the yield or the profit that I earned off this one position, I've opened all of these other ones. So again, this is just the past 6-7 months of how I took 15 grand to almost 40 grand. Let's see. But let's go back to here. So I've earned $133.89 off of these three positions. That wrapped ETH USDC, this full range USDC arrow, and a wrapped ETH KTA pool. That's a 54% spread, range that I have on that one. Just in the past 2 days, I cashed out on Sunday night. So what you're seeing here is what I earned off of roughly 4,000, 6,000, roughly $6,000 worth of liquidity. I've earned $133 in 2 days. So, I'm earning about $60, $65 a day just off of this, just off of what I have here. That doesn't count all my other positions. I have this over on Beefy. These are automated ranged positions to where they automatically rebalance. I won't get into it. I get into it in the DeFi Academy, but all of this is automated. All the profits that I make, all the yield I make, automatically compounds back into my position. And if it goes out of range, it auto rebalances. So this is very hands off. I don't have to do much on it. And then of course you have, I have my plume pools where like right now I'm earning 128%. I can't say enough about plume, and I won't get into it because this will go over an hour, which I'm about to do when I said I was going to be under 30 minutes. So apologies. So, I mean, that's pretty much it. I wanted to just kind of highlight, because I see a lot of people in chats and things like that, really struggling with hodling and just, the emotional part of hodling with these flat markets, wondering what they can do. I see people trying to trade. Some are successful, and that is awesome. Nothing but happy for you. I want people to be profitable. But I see a lot of people that are very frustrated with trying to trade. And then there's DeFi. And I see people that don't do DeFi properly They, go for these high APRs trying to get rich quick, and they get wrecked. That is why we are here. Is we will teach you, our community will teach you how to build out a portfolio that will just build out that foundation that Jay was talking about, of, that will mitigate that risk of losing all your liquidity in full range positions, in staking, and in lending. And then you can use that yield that you earn off that, with that locked in liquidity, and to take higher level risk. So you have your foundation you're building on, and then, kind of your portfolio, your middle and high risk, positions that you build on that foundation will be built on, and fed by that foundation. And then if you lose money, in those mid and high risk positions, then you're not losing that foundation. That foundation is still there. And you can be, constantly adding to that foundation so that it earns more and more and more and more. And that is how I went from 15 grand to now $40,000. Now, when the markets pump, say that we 10x, my DeFi portfolio alone, if we 10x, just, an average of 10x, my DeFi portfolio, I'll have about $400,000, or, potentially more, just in my DeFi portfolio. And like I said, as I do that, I have, and this is in our Discord. There is a bull run ladder out strategy spreadsheet and a DeFi portfolio, that tracker that I was using over here. This is all free. Again, we don't charge for anything. They're, basically Excel spreadsheets that have all the formulas plugged in. Everything auto populates, based off your inputs. And, but it's important that you have a plan to ladder out so that you do not round trip your bags. You can see here, I've built out, this is how many of each, the tokens of each asset I have, percentage wise, how much of my bag I'm going to sell and at what price. It automatically tells me this is how many tokens that you need to sell, and this is what it will be worth at that point. If I hit all of my price points, my ladder out, this is how much, basically I'll have, in stable coins, and cumulatively across all my assets, this is what I will have if I hit all my take profit, points. I will be all out in stables. It's a couple of assets I'm going to HODL 10% just in case. But I want to be all out because with $400,000 or $500,000 worth of stables, I can earn 10% on that. If I have $500,000 in DeFi, you can close your eyes and throw a dart at a dartboard and hit 10%. In stables, if I can earn 10% on 500,000, that's $50,000 a year. So that's, roughly what, 40 or 4,100 ish dollars a month that you can make passively without ever touching that 500 grand. You can just have that. It's basically a high interest savings account that just pays you out. And if you don't use it, if you don't want to make a car payment or do a home improvement or put money down on a house, you just let it build in there. That is the power of DeFi. And why it boggles my mind that people are not jumping on this opportunity. But of course, you can earn more than that. I'm just saying in the most basic way possible, the safest way possible, that's what you can earn. So anyway, that's what I plan on doing. And then if we do historically what, crypto does, and we, pull back 80, 70, 80, 90% into a bear market, my value will be locked in. When the markets dump, I'll be in stables. Markets will dump. I'll still have $500,000. towards the bottom, I'll start DCAing into Bitcoin and other good, solid, fundamentally strong projects that I can earn yield on in DeFi, and rinse and repeat. And I'll be set. And those that are learning and with us, they're going to be set as well. And you can ask any of them. Come to the Discord. I know that pretty much everybody in there. I have never once had anybody tell me in the Discord that they're losing money on DeFi because they're doing it properly. They're building out that foundation first, and then with smaller amounts of money, taking higher levels of risk. So with that, I'm going to end it before an hour because I'm really trying to do shorter content. But anyway, I appreciate you all. Thanks for tuning in. And please, by all means, come over here. Not for the sake of, like I said, this isn't monetized. I'm not telling you to go over here and watch our videos because it makes us money. I just genuinely want you to learn how you can make passive income while you're going about your daily life, and hopefully at some point get to where you make enough doing this that you don't have to go to a job. That you can pay off your house, or if you can make a couple extra $100 a month on your DeFi to help pay utilities or put groceries on the table or make a car payment. I mean, that's life-changing for some people. Or not just DeFi, but crypto doesn't have to just be about getting rich quick. DeFi can just be about making life a little bit easier. So with that, thank you all. Until next time, Veteran Crypto out. All right, hold on. I almost forgot. Don't think that you only have to do one of these. You can do a combination. So again, you can HODL some, you can DeFi some, you can take some profits, and you can play with trading. Don't feel like you have to pick one. You can do a combination of the three. So anyway, sorry, just wanted to throw that out there. Take care.